I don't think it's very wise to sell Bitcoin. I'm a Bitcoin maximalist. And so Bitcoin maximalist means a lot of things to a lot of different people, but certainly what it means from an investor point of view is I view Bitcoin as the apex asset. So MicroStrategy is a public company. Our strategy is literally to acquire more Bitcoin. Our strategy is not to trade. Our strategy is not diversified investments in a portfolio of technology companies. Our strategy is very simple. We're a levered long Bitcoin operating company. So if you think about us, comparing us to like a spot Bitcoin ETF, a spot Bitcoin ETF would only own Bitcoin, but it would be unlevered and it would charge you a fee. And our strategy is we use intelligent leverage. For example, we borrowed $2.2 billion at 1.6% interest blended. So we have very intelligent leverage, long-term, not mark to market. And then we buy Bitcoin with it. And then we don't charge a fee. And we generate a premium because when we generate cash flows or we do accretive financings, we then convert that into Bitcoin for the benefit of our shareholders. So it's very important for a public company to have a strategy, to be understandable, and to be consistent in that strategy and transparent. So MicroStrategy's strategy is acquire and hold Bitcoin. By any means accretive. By accretive, it means, when you get done with the transaction, you want your public company shareholders to feel like they have more Bitcoin per share, or they have accreted their Bitcoin holdings and not diluted their Bitcoin holdings. And with regard to myself, I'm long Bitcoin, man. like everybody else, I'm wishing I had bought more Bitcoin when it was 9,500 a Bitcoin, right? It's, ultimately, it's the best thing you can do. Strategy bought Bitcoin. We entered the market August 10th, 2020. And so what's happened to all these asset classes when you think about diversification? Well, between August 10th and October 31st, when we published our results on our quarterly result of MicroStrategy, then Bitcoin was up 192%. And that works out to a compounded annual growth rate of more than 40%. And the S&P is up 25%. Mm-hmm. And the NASDAQ's up 17%. Gold lost 1%. Silver lost 18%. Bonds lost 24%. So in terms of asset classes, Bitcoin is outrunning all of the other conventional asset classes. And if you invested in anything other than super, maybe Magnificent Seven, you're just not keeping up with inflation. But the Magnificent Seven stocks, if you look at them, while Bitcoin was up 192%, Google was up 68%, Microsoft was up 62%, Apple was up 51%, Meta Group was up 15%, Netflix lost 15%, Amazon lost 15%. So big tech doesn't look like such a good diversification versus Bitcoin. So we actually outperform Bitcoin. Why? Because we're levered long Bitcoin, right? We used intelligent leverage. We borrowed money to buy more Bitcoin. We didn't just put our assets into Bitcoin. We found a way to borrow $1 billion at 0% interest and buy Bitcoin, right? So if you can do that, I highly recommend you do that. The caveat being, you can't borrow the money at 0% interest if it's a margin loan, because you might get wiped out on Saturday night while you're sleeping. It can't be a mark to market. It needs to be like a 7-year, 9-year, 5-year term loan that isn't mark to market for that to be intelligent leverage. But I got to be diversified to say, okay, fine, buy a portfolio of scarce desirable assets that you want to hold for the next 30 years. And it has to pass, the Bernard Arnault test. It has to be something that a person richer than you and more sophisticated than you and more cultured than you and smarter than you will want to buy from you in a decade. And if you come up with that thing, maybe it's a Leonardo da Vinci painting, or maybe it's professional sports team, the Patriots. Maybe it's the middle of London, What I would say this is you could buy the best companies in the world and the best real estate in the world. It's still going to underperform Bitcoin. You made a lot of money, Bitcoin 10Xs or 100Xs, and you made a lot of money and you want to be diversified, then you buy scarce desirable properties, but you'll underperform. If you, if you're a Bitcoin maximalist, you just realize the cost of capital is, Bitcoin's going up 40% a year. The cost of capital is 40%. That means anything that you invest in has to yield that, which is kind of the risk-free cost of capital for a Bitcoin maximalist, plus the risk premium. So if you came and you pitched me an idea today, Michael, I've got this company that's really smart and it's going to outperform, Bitcoin, I'd say, well, then you have to do 40% plus another 10 or 20%. So if you can promise me 60% for the next decade each year, right? Like what's my forecast? My forecast is Bitcoin goes up 40%, then 35, then 30, then 25, then 20. And like 10 to 20 years out, it's clipping along at 20. And then over the course of 100 years, it's growing 14% a year.
Do you think it will sustain over the next 100 years? Will we even measure Bitcoin in US dollar in even 20, 30, 40 years time? Or do you think this system will collapse eventually?
100 years ago, an acre of property in Miami Beach was about $10,000. And now it'll be about 20 million. So that's a factor of 2,000 increase in price. That's against a fixed yardstick. If you do the calculation, the US dollar is being inflated and supplies 7% a year for 100 years. Weak current, that's the strong currency. That's the world reserve currency is increasing and supply 7%. So the asset inflation rate in dollars is 7% a year over 100 years. That's how you get from $10,000 an acre to $10 million an acre. Now, weak currencies in the developing world are inflating at 14% a year, unless they're really mismanaged and they're inflating at 21% a year. But I'll give you a simple fact. If you start with $1 million, and you hold it in dollars and currency that's being inflated and supply at 7% a year, after 100 years, your $1 million is worth about $700. But what do you think it's worth if you're holding it in 14% debasing currencies? 28 cents. Okay, so smart enough to realize that $1 million going to 28 cents is not a good investment. But the strong currency is taking you from $1 million to $700. And that's the rate in the last 100 years when the US is winning all the wars. We're winning all the wars. So the next 100 years, I don't think it, the question of what's the future of all these currencies in these countries, the euro versus the yuan versus the dollar, I don't think it's really that relevant. I think what's relevant is you just have two choices, or we have three. You either hold your money in the strongest currency in the world, and you're losing 7% a year. You're being cut in half every decade. You're being cut in half 10 times in 100 years. And you're going from $1 million to, $700. Or you put your money in the weak currency and you're being cut in half every 3 or 4 years. And you're going from $1 million to 28 cents. Or you put your money into a diversified portfolio of conventional assets, conventional real estate, if you invest in REITs, securitized real estate, or you invest in S&P companies, big companies, you're probably going to grow at 7 or 8% nominally. The money's going to lose 7 or 8% of its value in real terms. And in 100 years, the $1 million of purchasing power you have today will be $1 million in 100 years. The Emperor of Japan, haven't they owned the middle of Tokyo for 1,000 years or something? Or think like the King of England. Don't they own the middle of London for the last 1,000 years? And if you go look at the royal family in the UAE, it's illegal to buy beachfront real estate in the Emirates unless you're a royal. They won't just sell it to you. And it's because smart people realize that you should keep the high quality property for the next 100 years. You can't go buy the middle of Central Park no matter how much you bid. I can't buy it for $1 billion an acre. The city of New York will not sell it to me because they're thinking out long term. And if you had sold Central Park at any point in the past 100 years for any amount of money within reason, for a 200% premium to the going rate of real estate, it would have been a mistake, right? It's always a mistake to sell the good thing and buy the average thing or the conventional thing. As people think about currencies because of the term cryptocurrency, but I think a more constructive metaphor is to think of it as digital property rather than a digital currency. The use of a currency is as a medium of exchange. And the benefit of a currency is it's a tax-free medium of exchange. So when you make something legal tender in Japan or Russia or China or the US or Europe, it means that you can trade it 100 times a day at high frequency, and all the accounting systems are locked onto that currency, like the euro or the dollar, and there's no tax, taxable event. So companies and governments are always going to want to price things and trade things in the fiat currency as long as there's a government. If you're in Africa or some war zone and the currency has literally collapsed, there is no government and there is no effective currency, then maybe. But in all the places in the world where the government's functional, the currency is functional. So instead of thinking about that Bitcoin replacing that currency, which it distracts you and it causes you to make all these mental mistakes. Like people go, well, it's only valuable to replace the currency, but it's volatile and it's not built in the accounting system and it's taxable. So therefore it's not going to replace the currency. And so therefore I won't buy it. See, that takes you down a rat hole where you kind of tie yourself in knots in a straitjacket and you come to the wrong conclusion. The right way to think about this is Bitcoin is going to replace all the assets that are currency derivatives, and it's going to replace all of the assets that are weaker properties. So for example, I'm still going to use the dollar to pay my employees, but maybe I won't hold sovereign debt or corporate debt on my balance sheet. Maybe I'll replace the debt with Bitcoin, right? Do I want to wait 30 years and get paid 3 or 4% interest for 30 years? Or do I want to own Bitcoin, which is appreciating at 40% a year and in the extreme will appreciate, say, 14% a year, right? Tax-free or tax deferred. Bitcoin doesn't care about the company's management team. It doesn't care about the employees. It doesn't care about the country it's in. It doesn't care about the currency it's in. You see, you're moving out of that dimension. And so what you've really got is something like 99.5% or 99.9% of the wealth of the world exposed to country and currency and company risk. It's still going up in value, because the technical utility of Bitcoin is going to continue, and the productivity is going to continue. And the truth of the matter is there's always going to be chaos in the physical world. There's always going to be chaos in the political world. And that chaos it devalues currency, it devalues physical property, and it devalues companies because it's happening in the physical world, like that tidal wave. But that chaos is going to increase the value of Bitcoin for 2 reasons. There's a big idea. The first reason is, as people lose confidence in the countries and the companies and the currencies, and their other assets, they'll run to Bitcoin. That's one reason chaos is an engine for Bitcoin. But the second reason is, if you got drunk and you burned down your building, you would destroy capital. If you got angry and you destroyed your company, or you did a stupid thing, like maybe you produced the wrong product and nobody wanted to buy it and you bankrupted your company, you've destroyed capital. If you start a war and you bomb another country and you wipe out the entire city and all their factories, you've destroyed capital. So chaos in the real world destroys capital. But if you get drunk on a Saturday night and then you go swimming and you lose all your Bitcoin because you drop your hardware wallet in the ocean, or if you forget your seed phrase, Or if you have it in your head and someone shoots you and it's gone forever, you've actually not destroyed the value. You've actually accreted the value of everybody else's Bitcoin.